When it comes to trading Forex on a live account, one of the most commonly asked questions is how to grow a small Forex account. When I talk about Forex accounts, I mean accounts that are below $100, in most cases even below $50 or $20, and most times usually accounts worth just $10. In today's video, I'll be showing you the brokers that you can use to actually grow small accounts, because you cannot grow small accounts in every broker. So I'll be showing you a broker that you can actually use to grow your small account first. Secondly, I will show you the types of trades that you can take on a small account, because whenever you're trading a small account, you cannot take all types of trade and all types of pairs. You cannot trade all types of pairs. So I'll be showing you the pairs you can trade and also the types of trade that you can make on small accounts. Lastly, I'll be showing you how to apply risk management on even a small account, because most times the people believe that you cannot apply risk management when it comes to small accounts. But in today's video, I'll be showing you how you can actually apply risk management and grow the account. What's up guys, in case you're new to the channel, I'm ifexthegreat, and if you're a returning subscriber, thanks for all of your love and support in my previous videos. Without any further ado, let's get straight into today's video. The broker that we're going to be using to trade and grow this small account is going to be TradeWill, and the reasons why we're using TradeWill is because it has a minimum deposit of just $3, it has easy and fast deposit and withdrawals, and lastly, it enables us to use direct bank transfer to deposit our money into our accounts. For this video, I'm going to be depositing $5 into my TradeWill, and I'm going to show you guys how to go about it. So right now, I'm currently in the Tradeview application. If you want to sign up for Tradeview, ensure you use my link in the description. Also follow the steps if you want to be eligible to receive the free bonuses that they're offering to only my subscribers. So ensure you use my link in the description, sign up below, follow the steps listed in the description if you want to be eligible for these offers that I'm offering to you guys, my subscribers. So currently I'm in the application now, as you can see. And now the first place I'm going to go to make my deposit is going to be my account. In my account here, you can see deposit and withdraw. I'm going to be depositing because I want to show you guys how easy and fast it is to deposit in Tradeview. So you choose your quick bank transfer. That's what you could choose, quick transfer. And after clicking on quick transfer, you can see there are different amounts there. Currently, I'm going to choose 8,500 naira, which is equivalent to $5. So I'm depositing $5 into my trading account. So I'll wait for it to load. Now you accept the rules and regulations, read the terms and conditions, you click on accept. You have to click on I understand the terms and conditions and click on accept. Then they will provide you with a bank account. That bank account, you're going to copy the bank account and go to your online bank transfer application. Since I'm depositing $5, the amount I'm supposed to pay here is just 8,500. So I'll write the amount there, exactly the amount, 8,500. Then I'll put my description and then pay to them. So as you can see guys, my transfer has successfully gone and has gone through to the account. So you just have to wait a few minutes before we receive a notification that our deposit has gone to our account. So let's see how long it's going to take for us to receive the alert that our deposit has come into our account. So guys, just 3 minutes later, and we can see that it has shown success, which means that our account has been deposited. And as you can see from the above statement there, our new balance of our Tradeview account is now $5. So I'm going back to Tradeview to show you guys that the account balance has actually changed. So I'm going to go back now, and as you can see, the $5 is already in the account, which is equivalent to 8,500 naira. That's how easy it is to deposit to your Tradeview account. It's very easy and fast. Direct bank transfer is very good because you send your money straight from your bank account, and then within 3 minutes your money has gotten into your Tradeview account. Now what's up guys, now that we're actually on the chart, these are the pairs that I would say you guys should look out for, because as trading a small account, you cannot trade all types of pairs like gold. If you trade gold, you're literally over risking on gold, because gold has a very high peak count, and once the pair has a very high pip count, whenever it goes a direction against your entry, it actually leads to you eventually blowing your account, and you don't want to blow your account on just a single trade, or you don't want to take it wrong types of trade. So these are the pairs that I would advise if you're trading a small account. You can trade these pairs. So on our screen right now, you can see that we have so these are the pairs I would list out. We have NZD USD, Euro USD, GBP USD, USD card, AUD card, AUD USD, Euro AUD, GBP AUD, GBP card, USD JPY, and GBP NZD. So these pairs are actually very nice pairs. You can check them out. They have very small pip counts, meaning that you can actually trade them using small accounts. I will explain to you the types of trades you can take now. So currently we are currently in an overall downtrend. You can see a series of lower highs and lower lows. So this was the original entry from AUD card right here. So this was the order block that we're looking at. So what price this here was that price just took out the other block. It did a stop loss hunt. It took out the sell stops sell stop losses of the other block, and then it sold to the downside. So now when price started coming down all the way to the downside, it started falling. You can see series of lower highs and lower lows, and lower highs and lower lows as price descended to the downside. Now price was eventually coming back, just slowly retracing back to the upside, and right here we have a form of two double support here. I don't need to be explaining this thing to you, but I just want you to understand the type of trades you can actually take on small accounts. I would always advise that you trade on the 1 hour time frame as your lowest time frame, because you don't want to be trading on 5 minute time because of the too much noise. You're going to encounter too much unpredictability on the lower time frame, below 1 hour time frame. So if you know you want to eventually grow your small account, trade on the time frame like the 1 hour time frame on those setups, on those pairs that I've given to you guys, because those pairs 1 hour time frame can still handle small account trading. So let's imagine this case now. In this particular trade currently, I have 2 entries on this trade actually. So the first entry I had on this trade is right here. So this was the first entry. So I put my stop loss on this trade right here, and then I put my entry right here, and my stops just above this wick. So this wick is the, if the price doesn't pass that wick, then this setup is still valid. So I put my stop loss just above the wick right now. So it was a 15 pips stop loss, I can remember very well. So the stop loss was 15 pips. And now for the take profits, the take profit is not really important, but yeah, the take profit I always go for 3 hours. So I have a 3 hour take profit currently. So this was my first entry on this trade. Then the second entry was this morning, because the second entry was this morning actually. So once price as you can see, if I go to my line chart right now, I've actually explained how I trade setups like this on my previous video. So if you want to understand how to take setups like the way I take my setups, make sure you watch my previous video, because there's a lot of knowledge in those videos. So you can see this was previous support that held very strongly, and now price finally broke through that support to the downside. So when price was eventually coming back to the upside, you turn it back to your normal candlesticks. I placed my entry just below the previous support, which was broken, and then my stops were just above here for another 15 pips stop loss. So I actually have 2 trades running on this pair AUD card. I actually have 2 trades, and they are going very, very well, as you can see. So now the reason why I would actually advise that you trade on lower time frame and smaller time frames like the 1 hour time frame on those pairs I give to you is because you see this particular trade now is actually 15 pips stop loss. If you want to know how much you'll be willing to risk on this trade, you can actually go here. There is if you want to know how much you're willing to risk, if you want to control your risk management very well, you go to the website My FX Book. So just search for My FX Book on Google Chrome, or if you're on App Store, if you're on Android device or you're on iOS device, you can search on your App Store, on your Play Store, My FX Book. So what My FX Book actually has is what they call a position size calculator. The position size calculator will actually tell you how much you're willing to risk on a particular trade. You understand me? So if you don't need to be over risking on a trade. You actually need to know how much you're actually placing on a particular trade. So for that pair that we are currently in, remember guys, we are currently on AUD card. So they ask for a currency pair. I'm going to choose AUD card right now. So you can literally just search AUD card. So this is the pair right here. Then the account is the USD account, obviously. Then let's say the account size. This is a small account. I will say it's $10 for the account size. Then the risk to reward ratio. Since we're using a small account, you can actually use risk to reward ratio, because the ratio of a small account is usually very, very big. You can be risking as high as 20-30%. If it were a big account now, you could be risking just 0.5% to as high as 2%. But since it's a very small account, I would not even advise you to use risk to reward ratio. So what you do in this case is you actually press swap with money. So in this case, if I'm swapping with money right now, then I put in how much I want to lose, how much am I looking to risk. So for a $10 account, I'll actually say you risk between $1 to $2, because that's a very good risk management for a $10 account. So for the $2, you actually need to fail and lose 5 trades in a row before the account blows. While for if you're risking with $1 per trade, you actually have to lose 10 trades in a row before the account will go. So in this case, I'm using $2 because I believe my strategy is going to work, and I know that I cannot lose 5 trades in a row because of my back test and my study charts and every other thing. So I know when to enter the market and when to leave the market. So since they asked for the stop loss in pips, so we can go back to our entry. You can see the stop loss says stop 15, which is 15 pips. So we'll go back to my FX book and we'll actually type 15 in this case. So then trade lot size, trade size lots. Since we are trading on a standard account and not a micro account or a cent account, we'll leave the trade size as 1. 1 simply means you're trading on a standard account. So now we're going to press calculate. So as you can see, the results have come through. You have the risks. We're actually risking 20% on this trade. Then you see the unit is 1,900 and something. Then they told us to use 0.02 lots for this particular trade. So if we use 0.02 lots on this trade right now, that's actually going live. If we had used 0.02 lots on this particular trade, our risk would be $2, and our risk to reward, since I'm going for a 3-hour risk to reward ratio, our risk to reward would have been $6. So your account balance will simply move from $10 to $16 if the trade had gone your way, which is currently going on, which is, I believe, going to hit our TP. But if the trade actually goes against you, you would have lost just $2 and your account balance will be $8. So that's how to manage risks. And just the same thing for this setup. If you want to enter this setup, you could have placed a limit of 0.02 because the stop loss is also 15 pips. So you would have also placed a limit of 0.02, and then your stop loss and your TP target can be set, whatever you want to set your stop loss or TP targets. And if it had gone against you and hit your stop loss, you would have just lost just $2 on this particular trade. So the reason why you can actually trade other pairs on a small account like this is because I'm going to show you now. Let's say we wanted to trade gold. Gold in the Forex market is actually XAU USD. So I'm going to open gold right now so you guys can see why we cannot trade smaller this thing. Why we cannot trade pairs like this on a small account. So in a situation whereby we are trading XAU USD now, let's say we wanted to enter a buy, because I actually traded gold on one of my bigger accounts this week. So I'm going to show you guys the setup I traded, if I can see it very well now. So this is on my original account. So yes, this is what I traded. So I actually traded gold this week. So the reason for the entry was simple. Overall, we have gold is currently on an uptrend, which is very, very nice. We are looking at an uptrend on gold. So you can see if you zoom out on this, you can see that gold is currently going to the upside. So you have to looking for buys. So as I was looking for buys, I was just looking for the nearest demand zone. So this was the nearest demand zone right here. I saw this zone as a demand zone for me, so I chose this zone as a demand zone. So once price has indicated our demand zone, we are not really interested in price until price actually breaks through our original form of until price breaks through our previous resistance zone, which was this. So you can go to the line chart to see it clearly. So I'm going to also go to the line chart. So we see that this zone was the previous zone of resistance now, So you see we have the first resistance here, the second one here, the third, the fourth, the fifth. The final price broke out of the resistance. So this was our original breakout trade. So we'll go back to our normal candlesticks. I actually took this trade on gold this week. So I entered the trade position right here, and then my stop loss was just a few pips below here. It was about 700 pips stop loss, if I'm not mistaken, because I always like to give enough space in my stop loss. And then the target was 3R, which actually hit very, very fast. I remember taking that trade. I think it hit the TP on the same day. It's kind of crazy. So we can see the trade actually went well. But now look at this stop loss. You see the stop loss literally says 711 points as the stop loss. So let's imagine we wanted to trade this on a small account. If we have gone to gold, we could have gone to a small account here. We'll search for XAU. So you simply search for XAU USD. So here is XAU USD right here. Then currency is the USD. Then for the account size is obviously $10 the account size. Then so since we are on gold, the trade size in lots is going to be 0.001 because it's a metal and the values are usually very different from currency. Currency values are usually one standard lot, but for gold we're going to use 0.001 for their trade size. So now in this situation we are risking $10. We had our money, let's imagine we want to risk $2 on this trade. Then we had our stop loss in pips, which is actually here 711. So we'll write it here, stop loss in pip is 711. So 711 is our stop loss in pips, and we press calculate. For calculate, you see that it says 0 unit 0 lot 0 because the amount of the stop loss size is too big for the trade, for the account to carry, because the stop loss is too big for just $2. You cannot risk $2 on this trade, on this particular trade with this big stop loss. So let's imagine we actually went as high as $5. Let's see if we can risk $5 on this trade. 0.01, it says for $5. We're actually literally risking 50% of our account. But guys, this is not the actual value. Do you know why? Because it just calculates $5, it rounds up the risk management, but it's not actually $5 you will lose if this trade goes against you, because the amount you actually lose if this trade goes against you is $7.1. Let's imagine we write $7.1 now and press calculate. You see guys, it's still the same thing, 0.01. So literally risking 70% of your account, which it says here, for just one trade is very, very stupid. And that's why you cannot trade pairs like gold on a small account, because it's going to eat you up, because you're not going to have any form of risk management whenever trading pairs like this. So guys, remember, if you want to trade pairs like this, if you want to trade pairs on a small account, the pairs you're allowed to trade and the pairs that I would advise you to trade are the pairs I've listed out here again: NZD USD, Euro USD, GBP USD, USD card, AUD USD, Euro AUD, GBP AUD, GBP card, USD GPY, GBP NZD. Those are the pairs. Gold is not one of those pairs, so ensure you are not trading gold on a small account, because you eventually risk blowing the account eventually. Even if you are lucky on the first trial, how many times will you be lucky before you eventually blow the account? So guys, that will be all for the pairs I will actually advise you guys to trade on a small account. If you want to know exactly how much you're willing to risk on a particular trade and how risk management works, leave a comment on this video. Ensure you drop that comment down there. Tell me the videos you want to see. Tell me the videos you want me to explain for you guys, because I'm doing everything for free for you guys here on YouTube. You're not paying anything. I'm literally doing everything for you for free. So drop your recommendations on the type of videos you want to see. Eventually I will make that video. So I have in mind to make a risk management video, because I have a lot of people that have reached out to me in the DMs asking about how to control risks. So I'll actually make a video like that and I'll drop it very soon on my YouTube channel. So if you want any other videos or any other recommendations or whatever you need to know on growing a small account, drop in the comment section. I'll be replying to every and all comments that you guys drop there. So with all that said guys, now comes the end of today's video. Remember guys, I'll be doing the challenge myself, where I actually be growing a small account into big capital returns. So if you want to join me on that channel, or you want to join me on that series, ensure you leave a like on this video, subscribe to my channel and turn on post notifications so that you're notified whenever I upload future videos when I start this series of growing a small account into a big account. If you want to join my free Telegram channel, where I actually do live sessions once every month for free for all of the Telegram subscribers, ensure you use the link in the description. Join my Telegram page. If you want to reach out to me, I have my Instagram handle, I have all of my social media handles. With that being said, I hope you guys have a lovely, a safe and amazing day. Goodbye everybody.